Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Wednesday, September 18th, 2019, and we again find ourselves in the final hour of the trading day. As I mention each day, I believe the prices that are as close as you can get them to the close of the market are the most valid prices of the day. During the day, you have the algorithms, you have the day traders moving price around, but in the final hour is when the market makers and large financial institutions come in with size and move the price to what, in my opinion, is the most valid prices of the day, and therefore those are the prices that the majority of the time, make my buying and selling decisions from. So we are having quite the day today. The Federal Reserve came out, announced that they were going to reduce federal fund rate by 0.25%, which is what the market expected. I think the comments after were not what the market was wanting, at least. I think they wanted to get the impression that there's going to be more rate cuts in the future. But I believe Jerome Powell did not really accommodate them with that. So the market sold off after that happened. Currently, we're down 150 points on the Dow. We were down 200 earlier, so we have recovered a bit. NASDAQ's down 76 points, 0.93%, and the S&P is down 20 points, 0.68%. So kind of a wild one out there, and this is one of the reasons that it's important to position size correctly. No matter how good the setup, no matter how good everything looks, you just never know what's going to happen. And there's ups and downs in the markets. There's extended periods where you go up and up and up, and it's very, very easy. And then there are times where it goes down and down and for an extended period of time, and you think to yourself, how could this go down anymore? This is just ridiculous. I think I've probably screamed at my screen, 102,000 times in the last 24 years. Like, this is ridiculous. What is going on? But listen, it's part of trading. You're going to have to deal with it. Losses are just a normal part of trading. And if you position size correctly, then if the market goes down and you're long, yes, you're going to lose money. But, it's not going to be something that destabilizes you. It's going to keep you it's going to keep your emotions down if you don't position size correctly, right? Position size correctly, follow your entries, follow your exits. So trading is not easy, everybody. It is not easy in days like this, certainly not easy, and kind of brings the point home. So I just want to reiterate and give you my best advice, and that is always position size correctly. Don't have too much correlation. Adhere to your plan. Get out when you're supposed to, even if it's a loss. I know it doesn't feel good. It feels horrible, but if you're going to be a trader, you better get used to this kind of stuff. So with that being said, let me just make sure, see if everybody can hear me. If you can hear me okay, please do me a favor and just say hello or say I can hear you, just to make sure that we're all up and going before I get started here. Hey, Steve Burns, good to see you, my friend. Steve says, Fed day is a wild one. Everything down. Stocks, oil, metals, everything is down. Thanks for coming, Steve. I appreciate it. Always good to see you. Always an honor to have you here. And I watched your weekly video newsletter last night. It was really good. Really, really good, especially when you discussed some of the pros and cons of big gains, and then the reason you get big gains is because you give it a wide stop loss and then you have to give it back, and kind of the nuances between the positives and the negatives of that. But I found that really helpful, so thank you for that. And if you guys don't know, Steve has a weekly newsletter where he does an analysis 3 times a week. It's at newtraderu.com, and I subscribe to it, and I wouldn't miss it. I look forward to it every day, every other day when he has it. So thank you, Steve. JT, hey, how you doing? Good to see you, my friend. Charles Wilkinson, hello. Hey, Charles. Thank you for coming. Appreciate you being here. Steve says, I can hear you. Hey, what's Larry doing? Hey, Larry, what is happening? You're welcome. You're welcome. It was good stuff. It was good stuff, Steve. So, all right. Well, it's going to be interesting to see where this day ends. You know, a lot of times on these Fed meetings, you have a big move one way. Sometimes turns around. You never quite know. You never quite know. So, you know, these are always vulnerable, volatile days, kind of sometimes like earnings days. So, all right. Well, listen, the plan for today, as usual, first of all, we're going to go ahead. We're going to run the U.S. legal disclaimer. We're going to get that out of the way. We're going to come back. We are going to take a look at all my current positions, as ugly as that may be today. We're going to talk about when I bought them, why I bought them, how I'm going to manage them moving forward. After that, we're going to do a little bit on trader psychology, as I always do. You know, I try to teach you technicals, support and resistance, and the mechanics behind trading, but I always want to talk about trader psychology. It's the most important part of your trading skill. Always look at it as a skill. You know, it's so important, everybody. To do this for the long term, you have to keep your emotions in check, and you need to work on your psychology all the time. You need to be able to fight fear and greed and disappointment and FOMO and Romo, like Steve said the other day. So, you know, I'm just hoping that every day that I, you know, have some of these sayings, that eventually it will seep in and you'll internalize it, and you will look at skill, your emotions as control over your emotions as a skill. So we'll do a little bit of that. Then we're going to go through my watch list. We're going to go through each stock one by one. We're going to look at support and resistance levels. We're going to look at other indicators. The way that I look at indicators, I look at them as groups of buyers. And so if I can have a combination of different technicals like RSI or MACD, ATR channels, moving averages lining up, I look at that as multiple groups of buyers. And if you want something to go up, you better be in the company of other buyers, not other sellers, right? Makes sense. So we'll go through, we'll take a look, we'll see if there's anything interesting for today. And if there is, I will go ahead and take a position in that right near the close of the market. Then, when the market closes, if you have any questions whatsoever about anything I discussed today, please feel free, type it in the chat. I'll do my best to answer it, clarify it for you. If you have any symbols that you would like me to look at, I'm happy to do that as well. So that is the plan for today. And hold tight, and I will be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Thanks for sticking through that with me. John Cortez, hi Greg, can hear you loud and clear. Oh, good. Thank you. Thank you for coming, John. I appreciate it. Hey, Gamer Squad. How's it going? Good to see you as always. Appreciate you coming by. Steve Burns says, Adobe bounced off the 200-day after earnings. Yep, I saw that. You know, if you're the type of trader that you're allowed to take intraday trades, you know, that might have offered a good risk to reward ratio down there. If you just, you know, if you wanted to wait, or I'm sorry, if you didn't want to wait till the end of the day and you wanted to take a stab at it, today it would have worked, right? Sometimes it's not going to work. Majority of time, I like to wait till the end, not because I don't think that there are good opportunities sometimes during the day. It's just that it's just easier on me. It's less drama just to say, okay, yeah, could look good, but I'm an end of day trader. That's what I do. And it takes a lot of the emotion and the mental anguish out of it. So sometimes it works for you, sometimes it will not, but I just try to keep things simple. I try to streamline things. And we'll take a look at Adobe when we go through the charts for sure. But it was a good idea not to hold through earnings, as we always talk about, right, Steve? Hey, Murat, how you doing, bud? Good to see you. That's our friend Murat from Norway. So thank you for coming, Murat. All right, should we start here and do this? I don't know if I want to. It's so ugly, but we are going to have to do it. All right. First up is AGQ. So I did buy AGQ yesterday when the 5 EMA crossed over the 20 EMA. Over the long run, this is a good quantified, profitable back-tested approach to trading AGQ. AGQ is the double leverage silver ETF. Unfortunately, it did not go my way today. Currently, the 5 EMA is 32.65 and the 20 EMA is 32.91. So this definitely looks like it's going to close under today. That is my exit signal. It's unfortunate, but the last trade that we had on silver was a monster, right? Because it went our way, we kept it, and we had a nice return on this. This is a whipsaw where we get in, immediately goes against us, but it's going to be a loss. But in comparison to our large win before, it's not even close. So, that's the key with these moving average crossovers. They get you out for nominal losses and they give you the potential for big wins. And that, of course, is the secret formula, secret sauce to profitable trading. And that's having large wins, small wins, break-even trades, but always small losses. So I will go ahead, take a small loss today. This was double leverage, so I did take a half a position. So on days like today, you have to, look at what you did right and be grateful and try to stay positive with that. So I will be getting out of AGQ today. One thing I did want to mention, you can see we're down 4% today. When I take a crossover trade, I'm going to stay in that trade until I phase out or until the fast line closes under the slower line, with one caveat. If I have a 5% down day, intraday, from my entry, regardless of what's happening with the technicals, that's what I call an emergency stop, because I can't wait till the end of the day if something's down 30%, right? I'm like, well, I can't do it. It's not the end of the day. Well, there is an emergency escape hatch there, and that's if it goes below 5%, but before the end of the day. So right now it's down 4.09. So, I want to stick with the rules here, and it is off of its low, thankfully. And, maybe this will rally a little bit more, but definitely looks like I will be getting out of AGQ today for a loss based upon that 5 EMA, 20 EMA cross. All right, DDM. All right, DDM is down again today. Fortunately, I bought it way back here on August 26th. I bought it when we went below the 200, closed below the 200, and then closed back above the 200. This is a good, profitable, long-term approach of staying out of the DDM when it's under the 200 on a closing basis and staying in it when it is over the 200 day. So it has stayed over this entire time. I have scaled out, I scaled out, I scaled out all the way to here. I've scaled out of about 70% of my position on this nice up move. So the last few days it's been down and down. Today it is down, but well off of its low, but this is a completely mechanical trade for me. So I will continue to stay in this, phase out to the upside if it goes my way, and scale out of profits as it goes my way. But because this is a mechanical trade, I would grit my teeth and hold it until it closed back below the 200-day moving average. And this is, some of the pluses and minuses of these mechanical systems are if it was a discretionary trade, I would have gotten out here. No doubt about it. I would have gotten out here. But I like to have a combination of trading signals. I like to have discretionary. I like to have mechanical. I like to sell puts, overnight SPY trades. So I like to have a mixture. And sometimes, at least for my personality, the toughest thing is to hold on to these when they're going down. But it's mechanical. That was my intention getting in the trade. So, you know, I want to set a good example here and stick with my plan. So we are well off of the lows, so that's good. So that's good. So no profit targets today, is down today. But again, the phasing out as it's gone up takes a lot of the emotion out of it because I've scaled out here, locked in profits up at these higher levels, and the market cannot take that away from me. All right, Google. So this is one of the charts that works. I actually had another talk with Trade Navigator today. They are switching over from one provider to the next, and that's why they're having the issues. They feel like it's going to be resolved soon. I am so excited for that to be resolved because I don't like using these different charts, and I'm not used to them, and it messes with my timing and the whole thing. So anyway, important to have a backup in case something like this happens. So at least I have a backup. All right, so Google, you can see earlier today it was much lower. My stop on Google was a close below yesterday's low. Down here I thought for sure we're getting it out, but we have had quite the rally. So looks like it's possibly going to close above yesterday's low, and I will keep this. I did buy Google back here on September 10th when we had the 1030 simple moving average crossover. This is another quantified, profitable, long-term backtesting approach to trading Google, and this has been a good trade so far. I just want to show you here why I bought it, because of the 1030. Same thing on this chart, but I have scaled out. Last few days, no scaling out, no profit targets. Ever since back here on the 13th, I've been looking for a close below the previous day's low. Went below, closed above, went below, closed below. Today, looks like it went below, and hopefully it will close above. So as long as it closes above 1223.35, I will continue to stay in this trade. If it continues to go my way, I will phase out until I'm out of shares, or if we get a close below the previous day's low, that will be my signal to lock in profits. But we did get a good entry down here at 1202.70, and right now we're at 1228.90. So we'll watch and see what happens with Google. Wow, Google's close to going positive. Oh man, now the Dow's down only 82.79. So we were down 200 earlier. So we have had a nice rally. So you know, it's tempting to sell your positions in the middle of the day, but you know, I know it's hard to do, especially when it's going down. You think, wow, why should I wait till the end of the day and just have more losses? But you never know what's going to happen. So that's why I like to wait till the end of the day. All right, IBB. I did buy IBB back here on the 16th of September. I bought it because another profitable back-tested approach to trading IBB. That's the 5 EMA crossing over the 30 EMA. This is the blue line crossing over the gray line. So we bought it here at 105.18 yesterday. It basically closed where we bought it. Today we have gone down. Unfortunately, we are off the lows. But again, this is a mechanical trade. I'm going to stay in this until either one, either two, either three things happen. One, intraday in the future, it goes 5% below my entry. That's one. The second option is when the 5 crosses back below the 30 EMA. That will be my exit signal. To the upside, if I hit profit targets to the upside, I will phase out and phase out and phase out. You can see here my profit targets for today, nowhere near those today. But if it does continue my way, I'll just continue to stay in the position, phase out until I'm out of shares, or the 5 crosses back below the 20-day moving average. So that's the plan on IBB. All right. Qs. I did buy Qs back here on the 4th of September when the 5 EMA, excuse me, crossed over the 20 EMA. This is a good, quantified, profitable, back-tested approach to trading the Qs. It offers you the potential to have large rewards, but if you're wrong, to keep your losses relatively small. So I did buy it here, 188.30 on the crossover. You can see it's moved up nicely since the crossover happened. That was my mechanical entry, and this is a mechanical trade. I was able to take some profits up here at higher levels. I have about 70% of this trade or position size left. I have scaled out of about 30, but again, this is another mechanical approach where I will stay in as long as the 5 closes over the 20-day moving average. If it closes below, I will get out. If it continues to go up, I'll continue to phase until I'm out of shares. I don't think I've had this many crossover positions in a year. I usually have more, individual stock positions, but this was just one of those situations where I had a lot of these come together. So these are easy trades, they're color by numbers. All right. Oh, really? What happened to my... All right, hold the phone. All right, so I do buy the SPY each and every day at the close, and I sell it first thing in the morning. And you might ask yourself, why would you do that? I don't base it upon technicals. I don't base it upon anything. What I do base it upon is this long-term back study from Liz Ann Saunders at Bespoke Invest. But since 1993, trading the SPY, you have two options. First option is you could buy the SPY at the open every day and sell it at the close every day. So buy in the morning, sell in the afternoon. Buy in the morning, sell in the afternoon. If you did that every day since 1993, you'd have a negative 13.9% return. But if you do the opposite, what I do, I buy the SPY at the close, sell it the next morning. So every day I buy at the close, sell it the next morning, buy at the close, sell it the next morning. If you would have used this approach since 1993, you would have actually returned 634.2%. If you did the opposite, you bought in the morning, sold in the afternoon, you'd have returned 13.9%. So which one would you want to use? Obviously this one, and this is what I do. Excuse me. I buy every day at the close, sell next day in the morning. The blue line is the buy at the close, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. You can see this is the clear winner. Over the long run, it has had a really good track record. It has ups and downs in between. It's just a normal part. Even with a profitable trading approach, you're going to have this. So the key takeaway here, play the long game in trading, position size correctly so that you don't get wiped out or destabilized, and play the long term so that your edge can play out. So with that being said, this is yesterday's bar, but I did buy yesterday at 392 and I sold here today at 347. So a very small loss. Glad for that. It's lower now than it was. Let's take a look real quick. So 299.75. Yeah, and we sold at 347. So small loss. I've had couple small losses the last couple days, but here we did really well. I've been using this since February 26th, and it has been a really nice return, close to about 11.5% annualized return since I've been using this approach. So I will be buying SPY again at the end of the day today. Square. Let's go over to my other charts. Okay, so I did buy Square back here on the 13th of September. I bought it because we had this nice, let's take a look here. Actually, I'm going to show you, for big picture, I'm going to show you on this other chart. Yeah, so I bought it here on 13th of September. I bought it because big picture, we had a low, we had a rally, we had a lower low. You can see the momentum on this first move was very strong. indicated by the strong, deep MACD bars. We rallied. Now we've come back. We have made a lower low, but you see how there's not even any red bars there? That's showing that the momentum, even though we're lower, is running out, and this is what's called a double bottom with the bullish divergence. Now, when that happens, it doesn't mean just go ahead and buy, but what you do is you have to wait for a trigger, and I had several triggers here. I had a V1. Here's day one, day two washes out day one, day two closes a bit above day one's close. That is one entry signal. The previous day we were also under 30 RSI, and the day that I bought it, it closed above 30 RSI, so that is another signal. And another signal cherry on top is that we did tag the third ATR channel before reversing up. And I mentioned this, but 90% of prices stay above this line and stay below that line. This is the third ATR channel. This is the negative third ATR channel. When prices start getting down here, doesn't necessarily mean 100% of the time they're going to bounce, but about 90% of the time they do stay above this third ATR channel. But of course, you always have to be careful and look for an entry. But this was my entry here at 58.30. Next couple days it went up. I did take some profits. I was planning on getting out today if we close below yesterday's low. And you can see earlier in the day, it was below, this is real time, it was below yesterday's low. But currently right now, it looks like it is holding. It looks like the low is 59.15 and we are at 59.55. So I will be keeping square if it does close below or above 59.55. All right. Last but not least is SSO. This is double leveraged S&P. I bought this because we got another crossover. We got a 10 EMA, 50 EMA crossover. This is a good quantified profitable backtesting approach. I did buy it here on the 6th of September. I bought it up here, but I only took a half position, even though it's a mechanical trade, and I'm going to let it play out as a mechanical trade. The reason I only bought a half position here was because the price was higher than I would like it. It was right at the second ATR channel. Doesn't mean it can't continue up, and there's a possibility it would. So if it does, I want to be in there. But I just decided that I was going to take a half a position because I didn't like it here. I would like it much better down here in the value zone. So we are still up on the trade. Well, actually, 128.66. Yeah, we're still up on the trade because I bought it here, and we have scaled out at higher levels. So anyway, this is a mechanical trade. I will keep this position until I scale out to the upside. I run out of shares to the upside, or the 10 crosses back below the 50. This is a little bit longer term type of moving average. So I might be in this one for a while. But if it moves up, I'll continue till I run out of shares, or I will wait for the 10 crossing back below the 50. So those are the positions. We have rallied back pretty nicely here. We're only down 63 points after being down 200 points. So that is positive. So what we're going to have to watch today, we're going to have to watch AGQ. And it most definitely looks like we're going to be getting out of AGQ with the 5 crossing back below the 20. Square is another one that could be on the bubble if we close below yesterday's low, but right now we're hanging in there. And Google. And right now it is above yesterday's low, excuse me. So all in all, much better than it was an hour ago. See what happens when you guys join me? Things turned around. Thank you for that. Murat says, Greg, if you want to make poor people feel rich, let him lose something and find it again. This is how you feel once you get fully functional Trade Navigator. Oh man, that's so true, Murat. You never appreciate stuff till you don't have it. If your electricity goes off, you don't think about it, but when it's not there and you get it back, you're like, right? Or the water, or anything. But man, you are so right. I will so appreciate Trade Navigator so much more because it just adds so many variables to have these different charts and not be used to them. But yes, very good point. I will feel much richer and much more calm because this last week not having these charts, it's a little aggravating for me. I'll tell you what. I do this for a living, and so when you don't have your charts, everything lined up the way you have, you feel a little discombobulated. Hey, Marco, good to see you, my friend. Thank you for coming by. Really appreciate that. Google's currently green, Steve says. Could it be? It is. It is. Thank you, Steve. That's good to see, right? Good to see. Oh, we spoke too soon. Now it's down 40 cents. But it was down like $12 earlier, so I will definitely take it. Give me a second. Apologize. All right, everybody. So listen, I like to do a few minutes on some nice Twitter posts that I find on Twitter. This is from Stephen Goldstein at AlphaMind101. I can't say enough good things about Stephen and his AlphaMind podcast and his Twitter channel. If you haven't subscribed to this, you really should. He posts great psychological trading words of wisdom each day. I really enjoy it. I read it. I internalize it. So if you haven't subscribed, you really should. I would like if you guys would read trading psychology words of wisdom about 3 hours a day. Wouldn't be enough if I had my druthers, right? But Steve says, and Steve is a coach. Steve is a trading coach. He was a full-time trader, and now he coaches traders mainly at a professional, level, funds and so forth. But Steve says it is futile for coaches and mentors to tell traders who lack discipline or self-control to be more disciplined and controlled. These issues are symptoms, not causes. It's as pointless as telling people with a cold to stop sneezing. Casual aspects of behavior need to be explored. So, what does he mean by that, right? So what he means, or at least what I believe Stephen means, is, if you have a discipline problem or a self-control problem, you have to find what the root problem is, why you are being that way. This is why he has a little tree, and you have the problem here, which is the root problem, but then you have the causes. What are the causes that are giving you this problem? Are you trying to impress people? Are you subconsciously trying to inflict pain on yourself? Are you having issues in your life, your family, personal addiction issues? What's going on? What is causing you to have these discipline and control problems? I mean, I talk about habit. I talk about trying to be more controlled, more disciplined. The more you are disciplined, the more you create that habit, and the better and better and better you'll be. But what's that real root cause problem? And let me give you an example. Back in, now I can't remember, I know it was before 2011, but I think I've told you guys before, I started trading super young in my 20s. Didn't know anything about the market, had a lot of money, had no knowledge of the market. Horrible combination, right? Young, dumb, lots of money, no experience, and I went into the market headstrong, right? And I think I've told you the story. I lost a lot of money on Enron and WorldCom. I almost got the trifecta. I can't remember what the third one was. But it was a horrible situation. And when that happened, after I lost all that money, what I did is I took 3 months off. I walked the entire coast of Oregon one summer with my dog, and I did a lot of deep thinking. How did this happen? How could you let yourself get to this point? What is going on with you psychologically? And Problem is, I just didn't want to be wrong. And I had never gone through a loss before, so I thought things always came back. I mean, God, I wish I'd have been a price action trader back then. What I'd given to have met a Steve Burns or Dr. Alexander Elder or a Kerry Lavorne back then. But, I took that time. I thought, what's the issue? What's the psychological issue? Why couldn't you let it go? And I figured it out. Okay, it was just ego. I was just too young. I had an ego. I thought I knew what was going on. And, it was a horrible thing that happened, but in a way it was a positive thing that happened, because after that and on that trip and that walking and that thinking is when I went, okay, I'm going to learn how to trade now. I'm going to put this loss behind me, and I'm going to hire some of these well-known traders and authors, and I'm going to have them teach me how to really do it. But when I sifted through it all, thought about it, it was my ego. My ego is what made me not have the discipline and the self-control to literally press a button. Right. So anyway, thank you, Stephen, for that. But, if you're having issues with discipline and self-control, look inward, be honest with yourself, and try to analyze, in the most honest way possible, what your issue is. And, once you identify an issue, if you can identify it, then you can work on it. So anyway, I hope that helps everybody. And thank you, Steve Goldstein, for that great post. Okay. All right. Murat says, this is why I use 3 charting programs and 2 brokers, not to get used to one too much. Yeah, that's smart, Murat. Very smart. Murat's a smart guy. you always have good, you have good solutions to a lot of things, Murat. I got to tell you, that's great. There is a famous Dan Pina who is also in coaching, but it is high end. 1 week cost 20,000. Anyway, he says one thing: most people think that they don't deserve any better. This is why most fail. I agree with you. It's all about mindset, guys. It's all about mindset and being good to yourself. Steve says, in March of 2000, I had made enough to pay off my first house, but if I chose to, by age 27. But by 2002, I had a 50% drawdown. Oh man, I'm sorry, buddy. Yeah, I'm sorry. I know. I wish we knew now I wish we knew back then what we knew now, Steve, right? That's tough. I was right there with you, so I can empathize for sure. Yeah, Murat, our belief system can predetermine our success. We can defeat ourselves with our wrong beliefs. So true. So true. Frederick, hey buddy. Hi everyone. Hey, I got your email. I'm going to share after the end of the day, okay? The charts you sent me. All right, well, let's get to it. Let's get to it. Man, I'm fumbling my... Look at Apple, everybody. Apple is down. Apple is down. Now it's up $1.60. So that's fantastic. Not a good risk to reward or setup for me here. I would kind of need a reset. I would at least need it to go back into the value zone, V1, V2 to the upside, something like that. But at the moment, it is strong, no doubt about it. The relative strength is very strong. The Dow just went positive. Wow. So anyway, nothing on Apple for me today, but any of you have Apple, I'm glad. Adobe, this is what Steve was talking about. We had earnings. You can see it went right down to the 200. For people that say the 200 doesn't hold any weight, I would have them explain to me why we literally touched the 200 before we bounced off. So is there anything for me here today? There's not. We are back in the value zone. If we would have bought here, intraday would have worked out really well, would have offered us a good risk to reward ratio, but I didn't, because I generally don't buy anything intraday. But nice big reversal. Still down 2% though. Man, how much was it down before? Nothing there. Okay, AGQ, 32.79 on the 5 EMA, 32.95 on the 20 EMA. So definitely looks like I will be getting out of AGQ, although it's we turned a 10-yard loss maybe into a 4-yard loss or a 5-yard loss, so that's good. AMD bounced off its lows like everything else. Looks like it might be closing above the 10-day moving average. RSI is 47.35, so nothing really here on AMD for me. Amazon had a big reversal, didn't it? You know, if Amazon closed above yesterday's close, it would give us a valid V1 right here at about 182.75. So that's a potential. So let me just mark that down. It would be a nice V2 for sure. So let me see, Amazon. Let me quickly do some numbers on this. All right, so I've marked Amazon. BA, it's moving up today. That's nice. It's just too high. I need this to come back into the value zone. Back down here, testing the 200 might be interesting, but nothing on BA. Alibaba, it's cruising along here above the 1 ATR channel. This is just too high for me to buy. Like a lot of things today, I'm looking for a pullback into the value zone and a V1, V2 entry. Caterpillar, flirting with the 200-day here, but again, nothing. I need this to pull back into the value zone between the green, with this green and this green. This is the one and the -1 ATR channel. DBC, after having the huge gap up, we've gone down and down and down, so nothing on DBC. DDM we have on the break back above the 200, so that is now positive. So good. Disney is positive today, but there is nothing there right now. I would to get involved with Disney. You know, right now we're at a 49.16 RSI. I'd really like to buy a dip down at the 30 RSI or closer to the 200-day, or conversely, if it moves up a 1050 crossover. Etsy, the monster, did reject the third ATR channel today. Excuse me, the 200-day moving average, and looks like it's closing below. So, you know, maybe this is the end of this huge upward move. Maybe we're going to move sideways here. I don't know, but nothing on Etsy for me. Ford, you know, earlier in the day it wasn't a bad V2, but it's untriggered, so nothing on Ford. Facebook, moving sidewards there. Nothing on Facebook. Five Below had this nice big strong move. You know, we've kind of come down, which is fine, totally normal. We're coming back into the value zone. We are at a 56.35 RSI. If we could go down another day, test the 50, test the 20 here, have a nice V2 back up, I would definitely be looking for this. So, you know, let's be patient, wait for the trade to come to us. So nothing on 5. Gold down today, as with silver, so nothing on gold. For gold, again, waiting for the 520 EMA cross. That would be my signal to buy gold. Google is up today. Unbelievable. Thank goodness. I've been thinking I was going to get out of Google for the last 3 days, but it actually has turned positive. Unbelievable. That's fantastic. So we don't have to do anything with that. Goldman Sachs, right there above the 1 ATR channel, too high. Intel has had that nice big strong move up. You know, we're having kind of an orderly move back down. Again, like to see it come back down into the value zone. That is where I would be interested in getting back into Intel after we have a bit of a normal pullback dip into the value zone. So nothing there yet. IWM, nothing on IWM today. IBB, boy, we have come well off the lows. Well off the lows. You know, again, this is a good example of, you know, waiting till the end of the day to make your decisions. Imagine if I would have just pulled the trigger down here. Wouldn't have been too happy about it right now, for sure, right? And sometimes you get out here and it ends down here, and it was good that you did, but you know, you never know. So I think it's best to just pick a policy and stick with that policy. But very glad this has come back a lot. Johnson & Johnson has a nice V1 here. Here's day one, here's day two. Day two washes out day one. Looks like it's closing above day one's close and closing above the moving averages and above the 50 moving average. So this is a possibility. I'm going to write this one down as well. How are we doing on time? Dang it. Okay, I got to hustle. Coke, nothing there. Lockheed Martin, doing well, but it's too high. MasterCard would be a really nice V2 tomorrow. Here's day one, day two goes below day one, day three would close above day one. We'd be back above the moving averages. We'd be back above the 50. So MasterCard looks decent for tomorrow. MO, still below the 30 RSI, so nothing I can do there. Merck up a bit today. Considered that higher low V2 yesterday, but I believe it closed just under. So nothing on Merck now. Microsoft is up $1. Wow. Looks like we had a crossover there, but nothing on Microsoft. Netflix never seems to disappoint that it goes down after it has a rally, but here we made a lower low. We've come up. I'm not surprised the people that bought here probably phased out to here, or at least are taking their profits here. If it comes back down, settles down, and we get a nice higher low V1 entry, cherry on top would be if we went down below the 1 ATR channel back over to trigger the V1, V2. That would be good. So nothing on Netflix today. Nike is doing well, just too high, no signals. Philip Morris is 33.94. I would consider buying Philip Morris if it closed under 30 and back over 30, but not quite there yet. So let's be patient. PayPal. PayPal's down today. If we could close under the 200, back over the 200, that would be a potential entry for me on PayPal. Of course, the cues we have based upon the 520 cross. So this is doing well. Snap had that big day yesterday and continuing up today. Nothing there. SPY, we'll be buying that again at the end of the day. Oh, look at Square, everybody. It's positive on the day. Woo! I was going to sell this today if we close below the low of yesterday's low. So let's knock on wood, hope that it hangs in there. But we did buy this here on this V1, so this is working out. SSO, of course we have that. That is now positive. Bonds up a little bit after the interest rate announcement. Tesla down a little bit today. Twitter was down much more earlier in the day for sure. It's had a nice rally back over, what are we at? We're at a 54.67 RSI. Yeah, I mean, doesn't look bad. I'm not gonna buy it here, but that's looking good. I always watch Twitter because I know Murat has it. UNG rejected that 200-day, nothing there. UNH down, nothing there. Oil down again. UUP just moving sideways. That's the dollar. VIX, ooh, really sold off, didn't it? Really sold off. What are we at here? I mean, this is a good sign for the market for sure. Verizon down slightly today, nothing there. Walmart, nothing there. Energy down. XLF. I know I'm going through these fast, guys, but I'm running out of time. but there's just nothing on these. XLU, no. XLV, no. UPH. All right, so the potentials today. I would consider taking Amazon if we closed above yesterday's close. So that it's possible. It's possible. We'll put the line there. But we'll see. And the other one was Johnson & Johnson. Pretty nice higher low V2. I kind of like this actually. We're above the 51 RSI. We moved back above all the moving averages. This is a higher low. People that bought here most likely sold here. This is what drove it down. We attempted to go down, had a rally, not bad. And oh, I should say this is under the 200-day, so I would only be taking, here's the 200-day, I would only be taking a half position. So not too bad, not too bad. All right, so with that being said, let me see if I can figure out. All right, Google looks fine. Stay in Google. And Square was our other. Square's positive on the day. It's unbelievable. It's fantastic. All right, so we are going to be getting out of AGQ, barring some miracle at the end of the day, because here, right here, 5 EMA is 32.78 and the 20 EMA is 32.95. But at the moment, knock on wood, but we have turned a 10-yard loss into a 5-yard loss, so I will take it. Penny saved is a penny earned. Okay, DDM, we are fine. Google is positive on the day. So it looks like it's closing above yesterday's close. IBB, let's take a peek over at IBB real quick. We are the 530 EMA is still in place, so we're still fine there. We are going to buy the SPY at the end of the day. Square's fine, SSO's fine, and that's it. So what I am going to look at here is potential Amazon. Does not look like it's going to. And then Johnson & Johnson. Let me take a quick look at Johnson & Johnson on the weekly chart. Back in the value zone on the weekly. But I really do like this higher low V1. At the same time, it moved back above all the major, or above the 5, the 20, and the 10. MACD is positive, and nice V1. So it's under the 200-day moving average. I will take it. My stop will be close below the halfway, the washout bar. This is the washout bar. So basically right here, right? There's the line. If I have a close that's lower than half of this bar, I'll go ahead. I'll just take a small loss. I have no idea whether that's going to happen, but if I do, if it does go down, you know, we're going to contain the loss most likely to a manageable small loss. And if we are right and it goes our way, well, you know, we have a much bigger potential. We could get back up into this range. We could get back up into this range. But, you know, the risk to reward, is it 2 to 1? I think so. I mean, of course, you know, it's subjective. But I do like this, and it has been up most of the day. I think the relative strength was higher than the rest because I think people look at this a little bit defensive. So as is, I am going to buy a half position in Johnson & Johnson here at the end of the day. All right, so I'm going to get that queued up. Okay, so one quick check back through. AGQ, I am going to be selling at the end of the day. DDM is fine, it's up. Google is fine, it's up. IBB, we just looked at IBB. And the 5 is still above the 30. The SPY, I will be buying the SPY at the end of the day for our overnight SPY trade. And Square is up. Unbelievable. Unbelievable. So going forward on Square, you know, I'm going to be targeting the 50 RSI above. Right now it's a 38.63. So if we go up, reject the 50, I will take profits there. Again, if we close below the previous day's low, that will be my stop on Square. So right now that has not happened, so we can stay in the trade. All right. So it looks like Johnson & Johnson is our only candidate for today. Boy, what a huge comeback. Whew, that was nice. That was nice. I literally was down 2 times what I am now intraday. So wonderful comeback. 10-yard loss into a 5-yard loss. All right. What do we have here? We have a couple minutes. All right, I'm just going to go ahead and buy Johnson & Johnson right now.
Order partially filled.
Get that out of the way so I can
order filled.
These other ones in case.
Order partially filled.
All right, so we got Johnson & Johnson at 130.34. Jeez. All right. So I think we're good on everything here, and then we're going to buy the SPY at the end of the day as well.
Order cancelled.
301.10.
Order filled.
All right. So we did get Johnson & Johnson here. It's not showing. This is the yield chart 130.34, and then the SPY 301.10. All right, guys, give me 1 second. I have to move the dog around. I apologize. She could smell the time. I will be right back. Apologize. Okay, here we go. All right, boy, what a day, everybody. What a freaking day, huh? All right, well, we came out of it bruised, but not too beat up with the Dow actually up. So, listen, if anybody has any questions about anything I did today, please let me know. I'm happy to answer it, clarify. And but before I do, I just want to quickly and put in my quick plug each day. I hope it's okay, but I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time via Skype. I've had really good success with my clients. I really like to teach, and what we do here on the live stream, I really hope is helpful, but I know for sure it's not as helpful as the private one-on-one lessons. And, it generally starts just with a free phone call. I'd like to learn more about you. I'd like to learn more about your trading, what your challenges are, what your goals are, and then I'll put together a personalized lesson plan, hopefully to help you achieve those goals. And so, I offer a 10-hour course. It's 5 2-hour one-on-one Skype calls with me. And, I teach and I ask a lot of questions. I have you teach it back to me when we're done. And I've had a really good success with this. I'm teaching Anthony right now. He's in the chat. I haven't seen him here today. We actually have an appointment tonight, but he's learning a lot and doing really great. So I think what you get for the 10 hours for the price is pretty good. I think it's a good value. I think it's a good investment. And, a lot of times I talk about you have to have a plan. You have to trade your plan. Well, I think people know that. They hear it all the time. But what I found is most people don't really have a complete plan. They may have a few setups, but as far as where to get in, where to get out, what the position sizing is, what your correlation is, I don't think they have a complete plan. And that's, what I'll put together for you is really a complete plan that you can follow. So if that's of interest, my email's in the description of the video. If you'd like to set up a, free 30-40 minute call just to get to know each other better, please reach out to me. Let me know. Certainly no obligation whatsoever, but we just need to have that initial call to see if we're a right fit for each other. But you can reach out to me by email or on Twitter. And then also, if you like this channel, if you've been learning something, if you find it valuable, please do me a favor, hit the thumbs up button. It helps YouTube promote it out to more people. And Lord knows there's a lot of people out there that need help with their trading. And, this really comes home to me is when I have these 30-40 minute phone call conversations with people in depth. I really, it really sticks out to me how much people do not have a plan and are not thinking correctly about trading. Actually, when I can really speak to them, I really can find that out. So do me a favor and help me help them find the channel by hitting the thumbs up button. I would really appreciate it. Okay, end of the plug. Thank you for hanging on. So, all right. Larry says, I wish there was two of me, one to find the winners and one to properly manage the losers. Interesting. I wish there were two of me, one to find the winners and one to properly manage the losers. Well, you have to do both, Larry. Are you having an issue with this? Which one are you better at? Are you better at finding the winners or are you better at managing the losers? And question I would have for you, what do you think is the most important? To me, I would focus my attention on managing the losers. We talk about having a garden. We talk about having stocks as our flowers and our vegetables and all that. And our losses are our weeds. It's important to keep the weeds out of the garden, Larry. So, if you only have enough bandwidth in your brain to do one or the other, I would concentrate my majority of time on managing the losers. Now, Doji, what's going on, bud? Good to see you. Happy FMOC every day, buddy. Yes, it was quite the FMOC holiday today for sure, but it wasn't as bad as it was earlier. It was pretty ugly there. Murat says, I think Ford will hit 865 first before anything happens. There is too much outflow of capital. Even though the price moved up 5.5%, there is no change in capital. So the increase is artificial. Let's take a look. Yeah, Ford doesn't look so hot. Ford doesn't look so hot here. 865. Oh, so you think it's going to go down there and test that low? Could be. Definitely could be. Mount Doji says, I really like Twitter's action today. Yeah, almost triggered a V1 to the upside, but did close above the 20, which is positive, closed above 50 RSI. MACD still is negative, but we're in the value zone. Those are all good things. Whenever you're above the 50 RSI, but not too far above the 50 RSI, and you're above the moving averages, you're in the value zone. This is all good. This is all good. Better than buying up here, certainly. Mount Doji says J&J look good as well. Yeah, that's why I bought it. We'll see. Don't know. We don't know what's going to happen, but I do know if I'm wrong, it's probably going to be small. And if we're fortunate enough to have a trend or a move back up, then who knows? I mean, my risk is from basically here to somewhere in here, but my reward is from somewhere here, possibly up to the 200-day. So the risk to reward makes sense in my mind, but it's a very well-defined trade, right? Above 50, above 50 RSI, move back above all the moving averages. MACD is positive. So Murra says Zynga. Aha. Let's look at Zynga. All right, so break even for the day. That is good. That is good. That's moving up nicely. It looks like we closed above the 1 ATR channel. That is positive. And we're above the 50s. The 5, the 10, and the 20 are upward sloping. MACD is positive. We're above the 50 RSI. So hope that keeps going up. Greg, do you give 1-week coach sessions at your place? I like to travel. Well, we could talk about that for sure. Anybody wants to come to Utah to visit, you're more than welcome. Frederick, if you want to come from France, come to Utah. I will definitely show you around. Hey, speaking of Frederick, let's look at Frederick's charts that he sent me. So he sent me a couple trades today that he's had. So let's take a look. So Frederick entered on 9/11, V2 close above the 200 SMA. This is Dassault Systems. This is a French stock. So he bought previous day. We closed under the 200, back over the 200. Also triggered a V2. Very good, Frederick. Very good. So you bought here. You're still in the trade. That's excellent. RSI is at 55.85, it looks like. Yeah, 55.85. So, what is your plan, Frederick, on managing this trade? You don't want to give it all back. How are you going to manage this trade? What are you going to do? And then his second one that he sent was, what is this stock? Farming Group. Okay, so he bought the V2 close above the 20 EMA. So yes, it had a V2. Here's day one. Here's day two. Day two washed out day one, closed above day one's close, and also closed above the 20-day moving average. Boy, this has been an excellent trade for you, hasn't it? Big bar yesterday. So that's excellent. That is excellent. Big volume on that up move. Let's see, what's the RSI? 68.53. So, I would be keeping an eye on this. And, third ATR channel may have some issues up here, may have some issues if it hits the 70, rejects the 70, or touches this previous high over here. So, don't give this all back. But what a fantastic trade. Man, it was up 5.22% yesterday. Excellent. Excellent. Murat says, I worked for Dassault for many years ago. Oh, did you? Is this Dassault? Yeah, this is Dassault here. What did they do? What did they do, Murat? Or what did you do? Two great trades. Wonderful. All right. Wow, what a day, what a day, what a day. Can't believe we went positive. I mean, we rallied back 200 points to go positive. I mean, that's good. That is good. Oh, and I should say we did get out of AGQ. Forgot about that, but we got out of AGQ because we had the 5 cross back below. So, unfortunate that that happens. They're not all winners, but all in all, wasn't too bad. And let's survive and get on to the next trade. But, if you guys remember correctly, last trade we had here on silver was here on the same signal, 5 crossing the 20, and we scaled all the way out to here, compared to having a loss from here to here. Never fun to have a loss, but keep those winners bigger than the losses. Murat says they produce Gulfstream business jets and a lot of military aircraft and systems. Oh, I see. Great. Murat says my goal are the 3rd ATR channel after sell all. Okay. If it gets there, but if it doesn't get there, you have to have a plan as well. I mean, what about if it just, gets close and then comes all the way back? You don't want to give it all back. So, in my opinion, if it went up above the 70, closed back below, that would be one potential reason to get out. Or if we had a big gap up and a big reversal, something like that, or at the very least to close under the previous day's low. But this looks pretty strong, so I think you're in pretty good company. Mert says, I am an aerodynamicist. Oh, I did not know that. It doesn't surprise me, though, because you're smart, Mert. I can tell you're super smart. Super smart. That's excellent. Frederick says, only small position, 400 euros each. Doesn't matter. Doesn't matter if it's 400 euros or 4 million euros. It doesn't matter. It's just the return on the investment that counts. And what counts is that you are trading this. You waited. These are good entries. So I'm proud of you. I'm definitely proud of you, Frederick. All right. So anybody else have any other questions? Please let me know. Otherwise, I'm going to get out of here and I am going to go hiking. And I have a one-on-one lesson tonight with Anthony, so I'm looking forward to that. I'm going to teach him all the wonders of double bottoms with double tops and double bottoms with bullish divergences. And I'm going to put him through the ringer after I teach him. All right, let's see. Be interesting to see what's going to happen tomorrow. This has been some volatile action lately. All right, so we'll do that. And we will bring this one back. Okay. Frederick says, it's hard to have an exit plan. Easier is the entry plan. Yeah, I know, but Frederick, that's the difference between traders that just do okay and really excel is how they exit. I mean, I'm obsessed with exit, so please have a plan in place. I don't care what it is, but at least have something in place. But my opinion is if it rejects that 70 RSI and comes back down, if it were me, that's what I would do. I'm not telling you what to do, but I'm just, that's what I would do in that situation. Hey, what's Larry doing? Says, thank you for what you're doing. Have a great hike. Oh, thanks, Larry. I appreciate it. I will I will have a good hike. Thank you very much. And hey, I saw your comment on the phase out video, and I think you wrote something like, how do I know where to phase out? That's kind of what I tried to do in the video. Did you not understand it? But basically what I do is I look for resistance above, whether it's a moving average or 70 RSI or a third ATR channel. Then I measure the close of the price of the position that I'm in up to that level, divide it by whatever the value is of 0.45 ATR, and then I divide that into how many shares I have. That tells me how many shares to get out of, and then I add whatever the value is of the 0.45 ATR onto the closing price, add those two together. That's my first profit target. Add the value of the 0.45 onto that. That's the second profit target. Then take that same value, the 0.45 value added onto that second profit, that becomes my third profit target. But I tried to explain that all in the video. Marat says, Frederick, if you can double 400 euros once every year in 10 years, we will be visiting Greg with a private Gulfstream Amazon. That would be awesome. That would be awesome. Well, listen, everybody, I appreciate you coming. I appreciate you staying all the way through the live stream. I hope it is helping. I really hope it is helping. Like I said, I honestly did start this channel to share with everyone what I've learned over the last 24 years, because I know what it's like to want to trade, have a passion for it, but really not know what you're doing and not being able to put together a full plans and a plan that you can follow. And so, that is why I started this channel. And, some days we have up days and some days we have down days, and sometimes it gets frustrating and then other times it's euphoric. But that's just part of trading. But again, if you take anything away from this channel, everybody, treat trading like a long-term endeavor. You hear about long-term investing. That's good. People can wrap their head around that. But let's look at trading as long-term trading. Position sizing correctly, not having too much emotion, not letting big days get to you too much, not letting down days get to you, but staying in the game. That's the key. Staying in the game, increasing your skills every day, and staying in the game. And if you have an edge, it will play out for you in the long run. So that's my advice. That is my advice. So, okay, well, listen. Again, thanks for coming by. Thanks for investing your time. I hope it's paying off. There's some kind of dividend, knowledge dividend that's paying off for you. If you have any other questions that you didn't think of today, feel free to email them to me, or you can send me a message on Twitter. I'll get back to you as soon as I can. And so I guess that's a wrap for today, and I'm very grateful that we had a nice comeback. And so I will see you all tomorrow. All right, Frederick, thank you. Appreciate it. Great trades. Murat, thank you. Always great input. Hey, what is Larry doing? Thank you for coming by. It's always nice to see you. Thanks for spending time. Mount Doji, hope you're doing well, my friend. Hope your trading is going well. Appreciate you coming by. Steve Burns, always an honor to have you here, sir. Really is. And I'm always excited when you're here, and I know everyone else is too. So thank you very much. Marco, good to see you, my friend. Hope you're doing well. Hope your trading is going well. If you have any questions for me, please let me know. Gamer Squad, great to see you. John Cortez, nice to see you. Appreciate you being here. Charles Wilkinson, glad you came by, and hope to see you again. And of course, our friend JT, it's always great to see you. And if there's anything I can help you with, JT, please let me know. So I think, Frederick says, okay, but no more capital to trade after. That's true. Greg, Murat says, Greg, I will tell you something. You will manage to get a real good quality group over time. Your strength is the charting. It looks so difficult in the beginning, so any weak links fall out quick. Your strength is the charting. It looks so difficult in the beginning, so any weak. Oh, I see. Yeah, I'm really happy with the group that we have. I'm really glad that you guys are coming back, and of course with the charting, yeah, it does look difficult in the beginning, but once you start to, it's like learning a new language. You know what I mean? It's very difficult at first, but after a while you start to learn it. And apologize with this charting issue that I'm having. I know that makes it even more difficult. It's always better to look at one chart every day instead of a couple different charts, and I understand that. So, but hopefully we'll get that taken care of. So Marco says thank you, Greg and all, and John says thank you, Greg, very helpful. Good, I'm really glad. So all right, everybody, enjoy the rest of your day. Go out, do something nice for somebody, say hello, open the door, give them a donut. I don't know, just something, right? We need more of that in this world. So have a good day, and I will see you all tomorrow. Take care, everyone. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.